Okay, good morning, everybody. Welcome back to Infinite Investors. Today, I'm going to do something slightly different with the portfolio update. Obviously, I've done a portfolio update about 2 or 3 days ago where I talked about my top movers and fallers and the impact of coronavirus and what's been going on with the market, etc., etc. Today's video, I'm going to talk about one dividend payment, but the rest of the video, I'm going to go through every single one of my stocks right here, and I'm going to tell you whether I'm going to buy, sell, or hold that stock based off what's going on at the moment. So, just so you know, there are some in every category, and I'm just going to give you my rationale and reason on how I feel about some of my stocks, and maybe it's something that you should think about doing with some of the stocks that you hold, because in yesterday's video we talked about whether you're a buyer, a seller, or holder in this current climate. So go and check out yesterday's video if you haven't really done so, and that will give you some more context as to why I'm doing this now. But yeah, if you want to know more, like, comment, subscribe, help the channel get to 4K subscribers, and we can get the world of investing out to more people. I think we're at 3,960, so if there's 40 of you out there, please subscribe to the channel. Infinite Investors is about helping new and non-investors make sense of the market. Do that in a number of ways, and one of them is the weekly portfolio update, which is every Saturday morning. Now, follow on Instagram at Infinite Investors, and also if you are new to investing and you want to start investing, now might be the perfect time. Things are on sale at the moment, and so you might be bagging yourself a little bit of a discount. So use my link below, freetrade.io/infinite-investors, deposit at least £1, and you will get a free share worth up to £200. I saw Free Trade tweet some guy got Alibaba share which is £173 or something like that. I'm like, rah. So listen, it does happen. It does happen. Some people do get lucky. Now let's get into the portfolio. As you can see here, it says I'm up £732.78. It should really be £733.43. So I don't know if Free Trade is pinching a few pennies from me, but we'll deal with that later once I put my last £1,000 in there. And obviously you can see from the monthly graph how everything has started to go, downwards from this point onwards. Not too long ago, Wednesday the 19th of February, I was up, 30,109. And then now you can see the 29th of February, which is 10 days, I'm down basically 4,000 from that point. So obviously there's been a massive drop in the market. I'm sitting at around 2.95% in profit at the moment. 17% I was 2 weeks ago, 8% 2 days ago, and now 3% now. I guarantee next week I probably will be in the red, but I'm currently still clawing and still scraping a little bit of a profit, which is a little bit of a the light at the end of the tunnel, so to speak. So listen, am I optimistic? Yes. Is this an opportunity? Yes. Are the first two questions I just said a lie? Yeah. No, I'm joking. I don't think it's a lie. Listen, at the end of the day, I spoke a lot in yesterday's video about being optimistic and being positive through these times. At the end of the day, there is a lot of opportunity here. There's a lot of potential buying opportunities here. Some stocks are getting at too high valuations that I actually couldn't invest in. It's actually opening up more stocks that I might introduce into my portfolio, as well as the opportunity to buy stocks that I currently believe in, which currently sit in my portfolio at cheaper discounted prices. So there was a quote in yesterday's video which I definitely encourage all of you guys to go and watch. If you like a stock at $100, you should definitely love the stock at $80. And it spoke about all of the people that made a whole bunch of money during the recession when things started to go downwards. So listen, this should be seen as an opportunity. I'm very positive about this opportunity, and I'm going to talk more about that when I go through all of my stocks one by one in this portfolio update. But the first thing I'm going to talk about is one dividend payment that I've received. You can see that dividend payment is here, and that is the JP Morgan Emerging Markets Government Bond, £3.77. This is my bond that basically pays for my ISA. So my ISA is basically paid for the £3 a month charge, and I've made a little 77p, which is a nice little profit. That's the only thing to talk about. Let's get into the stocks now. Obviously, for those of you that don't know, I hold 21 stocks, and I'm going to get the high level analysis out of the way now, just because some of you might not want to listen to my take on each individual stock. So at a high level, I hold 21 stocks, and basically I've categorized all of my stocks in terms of sell, hold, buy, and strong buy. So I've got 2 stocks here that I would like to sell. I've got 4 stocks that I would like to hold. I've got 7 stocks that I consider a buy, and I've got 8 stocks that I consider a strong buy within this portfolio. Also, when I look at my portfolio as well, I've got 21 stocks, as I've mentioned. 13 of them are currently displaying or experiencing a loss at the moment, so I'm in negative with 13 stocks. 8 stocks I'm in profit, but just remember, overall my portfolio is in profit. So it's very, very telling that only 8 of my 21 stocks are in profit, but that 8 is making my whole 21 stock portfolio be in profit. And it reminds me of a Warren Buffett quote before, where he talked about sometimes you only need 3 or 4 key businesses in order to be successful. I think we talked about that in the diversification video. If you don't know, I'll put the link in the description and then we can talk about that. So sometimes it's not about spreading all of your money across 100 different stocks. It's actually about backing a few different horses, because again, only 8 stocks that's currently in the green is keeping my whole 21 stock portfolio up, which tells me a lot really in terms of those stocks and, you know, the characteristics and why or why not I might have selected those. So yeah, I'm going to go through all 21 stocks now. I'm going to start with the ones that have fallen the most this week. So I'm going by the stocks that have fallen the most up until the one stock that's actually gone up this week, which will be at the very end of this. And then I'm going to tell you, obviously, I'm going to show you whether it's in profit, whether it's in loss, whether it's a buy, hold, strong buy or sell for me, and any supporting information about that. So the first stock I'm going to talk about is Sentiment. Sentiment, as you can see from the 7-day graph, has gone down 15.39%. I am still in profit within Sentiment, 15% profit, which is good. Obviously that's £226, as you can basically see on your screen at the moment. And in terms of whether it's a sell, hold, buy or strong buy, for me Sentiment is a buy. I put Sentiment as a buy. It's not a strong buy just because I think that it should be a strong buy when the market starts to peak up again and Sentiment starts to fall outside of that. But it's definitely a buy because Sentiment has been falling. I mentioned in yesterday's video that people are actually selling gold and commodities as well. Typically you would find gold is going up when equities are going down, but actually both commodities and equities are going down because people are trying to cover the amount of losses that they've been making, you know, in other areas of their portfolio, which, you know, can be significant for people. I've made a £4,000 loss, or I'm down £4,000 in only 10 days. You know, there's going to be other people out there with hundreds of thousands in the market that's going to be down 10, 20, 30 grand, etc., depending on what stocks they've picked. So yeah, Sentiment is definitely a buy for me. I love holding the stock and I will continue to hold it, you know, for the foreseeable future. The next stock I'm going to talk about is right here, Legal and General. You can see from the 7-day graph that it's at 13.56%. And this stock at the moment is now in a loss for me, which is a bit disappointing because Legal and General is one of my favorite stocks. But you know what, I think Legal and General will bounce back. I've put Legal and General for me as a strong buy. I think it's a fantastic business. I talk about it in great lengths in my previous portfolio video, so I'm not going to repeat everything about it. Go and check those videos out. But obviously it pays a great dividend. I think there's a lot of value. I like the way they've diversified their business model. They sold off areas of their business which are underperforming, and they've reinvested in new sort of growing areas, and I just like the way that it's run. But yeah, we talked about it in a lot of detail, so I'm going to move on from there. Legal and General for me is a strong buy, and I will continue to buy Legal and General. The next one I have to skip over to the basic side for, and that is Landsec. So Landsec in position number 19 in terms of the losses. You can see that has gone down 11.7% for me over the last 7 days. And Landsec for me at the moment is in a loss. You can see the loss is about £56, so not the most in terms of the grand scheme of things in my portfolio. I'm considering Landsec a hold. I think it's a good REIT to have. It pays a nice quarterly dividend, but I think that my money can be better deployed elsewhere. So when I do have cash and when it's after April the 6th and I am looking to invest, I will obviously put more money into other stocks. Now obviously Landsec is in my basic account, so it's not ISA dependent in any way, which then means I can invest in it tomorrow and I can continue to invest in it as much as I really see fit. But I would rather I'd rather save that money in cash, to be honest, and put that money towards my next year's ISA allowance personally. So I've put Landsec as a hold. I'm not ready to sell it at this current moment, but I'm definitely not ready to add too much more money to it at this current juncture. So for me, Landsec will be a stock that I will just hold and I'll use my money elsewhere. The next stock, number 18, is Uber Tech technologies, Uber. And Uber, basically, as you can see, in the last 7 days has gone down 11.59%, but it's still in profit. It's still in profit. I only made I've made more than 3 investments in Uber. Yeah, I've made 4 investments in Uber since I bought it originally at the 19th of December. Just been adding some money at some intervals. And you know what? It's still in profit, about £76.90. You guys know my feeling about Uber. I think Uber's a fantastic business. They are hopefully still on the path to 2020 profitability in Q4. I definitely think there's more value, and I just see this as a discount in the Uber stock. This is giving me the opportunity to basically buy more shares at a good price. So I'm definitely going to be putting a lot more money. It's a strong buy for me, and I'll be continually investing in Uber. Now, there's obviously a chance it might not reach 2020 Q4 profitability. Even if that happens in 2021, maybe the markets might negatively react to that at the time, but I still think there's definitely a lot to look forward to with Uber shares, Uber stock, so I'm going to continue buying Uber. Next one, number 17, is Virgin Moolah. Now, Virgin Moolah has gone down 11.54%. I am still in profit, clawing a little, £28.25, but you know what? It's all money, B. It's all in the green. It's all money. And Virgin Money for me is a strong buy. Again, I think it's a fantastic business. We talked about its last earnings update, which it did really well. They've got great assets, which is obviously their loans and their loan book. They've recovered well, I think, since the whole PPI situation, and now that's over, I think they're going to go from strength to strength. And so, yeah, I see this as a nice discounted opportunity. You know, there was a time when Virgin Money, I think I was buying Virgin Money shares at £2.12 or £2.10 or something along those lines. So listen, I think Virgin Money should be going back up. Let me have a look at the month graph just to make sure I'm not chatting rubbish. Maybe £1.91. Let me look at the year graph. Yeah, £2.05, etc. So listen, I do think there's opportunity with Virgin Money to continuously grow again. I'm in profit with it, and I'm definitely going to continue investing. So Virgin Money for me is a strong buy. The next stock is Vodafone. So Vodafone went down 10.83% in the last week, and as you can see, I'm at a loss of 3.35%, 35 quid. Vodafone for me is a hold. I do think that Vodafone has gone through quite a lot of troubling times. There's a lot of their businesses worldwide that haven't done so well. Things are being bought, things are being sold, investments they've made haven't gone so well, etc., etc. Changes in personnel, changes in team, etc., etc. They just paid me a dividend. I do think Vodafone will eventually recover, but it's not something that I'm, putting all of my eggs in at the moment. So it's a hold for me. If I have money, I don't think Vodafone is the stock that I really want to be deploying that money towards. You can see what it's looked like over the last max period, but over the last year, it's technically gone up 0.09%. Probably most of that is due to this whole TowerCo situation that happened last summer, which it just had a massive rise from that point onwards, to be honest. But yeah, Vodafone, I'm going to hold the stock. I'll probably will add some money to it, like 50 quid or here and there, but I'm not going to be deploying big amount of capital to Vodafone. It's just going to be a stock that I'm going to hold at this current moment. The next stock is First Solar. I spoke about it in my last portfolio update. This is a candidate for me to sell. As you can see from the last 7 days, 10.62% fall. Overall, I'm sitting at about a £314 loss. For me personally, First Solar is a stock that I am going to look to try and offload. It's a stock whereby I want to see if the money that I've got in there can be put to better use, which I believe it can be, which is the reason why I will be doing that. And so I'm probably going to start averaging it down, and once I average it down to a little bit of a profit, then obviously I will be selling it off. Now, a lot of people I've seen have mixed reviews on averaging down. Averaging down is for me a trading tactic that comes from my trading days, whereby when things are going downwards, you keep on putting more money into it, and then you average your average share price. So as you can see here, your average share price is £44.47, and the current share price at the moment in terms of pound would probably be about £38, let's say, something along those lines, right? So you're just going to keep on buying at lower prices so that average share price matches what it should be matching here, and then doing obviously whatever you want to be doing with it it's a mathematical certainty that if you put enough money into it when it's going down, it will average down to basically zero, and it might even go back into profit if the share price starts to rise again by the time that you average down. So it's just a case of it's a case of when rather than if, and it's something that I'm comfortable doing because I've done for many years and I will continue to do so. So yeah, I'm probably going to average down First Solar, take that money and put that money into either a new stock or into one of my existing stocks. So that is a sell for me, but obviously I'm not going to sell now. I'm going to average down and sell later on. The next stock is Aviva. Aviva for me was a stock that actually I felt to sell and put that money into Legal and General, but now obviously you can see 9.94% drop, and I'm losing too much money in Aviva to be able to do that now. There was a point when I was in like 2% profit. I should have taken opportunity, but I always do that. I always get into a couple of percent profit and then I actually don't like selling my stocks. So you know what, that is something that I need to work on anyway. But the point of the matter is, with Aviva, for me at the moment, it's a strong buy. I'm going to continue to buy Aviva now. I'm going to continuously invest into Aviva quite heavily. It pays a fantastic dividend. I still think it's a good business, but I do think it mirrors Legal and General a lot. And I think Legal and General is a little bit of a better business than Aviva. So I'd rather put all of the money there. So I will probably sell at some stage, but it's not similar to a First Solar situation where I'm actively trying to sell it. Here, I'm just going to average it down, see what happens, keep on investing heavily, and then if it actually goes through a bit of an upturn, I might just hold on to it and I might just continue just to leave it at that point. So I'm seeing it as a strong buy, just purely on the basis that I'm going to be investing into it, and then I'll decide later on what I'm going to do in the future. The next stock is Taylor Wimpey. You can see that Taylor Wimpey has gone down 9.85%, but I'm still in profit, £267, 19.11%. I think Taylor Wimpey is a fantastic business. It pays a great dividend, and I think this is just providing some value opportunity with Taylor Wimpey. So I've talked about Taylor Wimpey. They had good earnings. They've got a good order book. They're doing the whole Taylor Wimpey Spain stuff. Listen, if you want to know more detail, just check out all of the previous portfolio updates. We talk about this week on week. So at the end of the day, Taylor Wimpey for me is just opening up an opportunity to buy some more, and that's what I'm going to do. It's a strong buy for me. Sorry, it's a buy for me, not a strong buy. It's just a regular buy for me, and I'm going to continue buying that business. The next one is Barrett. And you can see Taylor Wimpey was 19.11, Barrett is 19.12%. They tend to have a similar outlook, but sometimes they do change slightly. Barrett was my favorite stock of 2019. It's sitting at a £305 profit for me at the moment. And Barrett for me, similar to Taylor Wimpey, is a buy. I'm down 9.53% in the last 7 days, but I'm going to continue to buy Barrett as well as Taylor Wimpey. Again, I think it's a superb business, great dividend, great value. I think it's well run. They've already alluded to the fact that they're on target or ahead of target for their 2020 goals, and maybe also 2021 as well. So you know what, I just think over the next couple of years, recession or no recession, there should be some opportunity. Now obviously if there is a recession, this might change quite significantly, but you know what, I at the moment still am very happy with Barrett, so I'm going to continue buying. It's not a strong buy for me, but it's just a continuous buy for me. S&P 500 is the next one. So now we're down to number 11. S&P 500 down 9.12%, and this for me is a stock that I just think everyone should have in their portfolio, whether it's a Vanguard one, whether it's iShares one, or with another fund provider. I just think it represents the market and it's something that everyone should hold. So for me, it's always going to be a strong buy and something I'll just buy forever. Not much more needs to be said on the S&P 500. The next one, we're going to have to scoot over to the basic side again, and we are going to be talking about British Land. So in similar vein to Landsec, British Land is down for me. It's down a bit more. You can see 9.11%. That's 9.75% overall, £89 in the loss, in the red. And for me personally, I'm just going to continue to hold British Land as well. Again, I think it's a good REIT. It pays a quarterly dividend as do most REITs, but I'm not willing to invest too much more into that at the moment. I'm definitely not willing to sell it at the moment, so I'm just going to hold it and see what happens over the course of the next few months or so forth, and then obviously act accordingly with British Land. The next stock is Imperial Brands, which rhymes with British Land, and that is stock number 10. It's number 10 in the list. Now that stock is down 8.62%. As you can see, I'm down 21% overall. £486. Now, Imperial Brands is a sell for me. I need to just let go of this stock. I keep on trying to keep hold of it. I did average this stock down and it went into about 3% profit, and then I thought, you know what, it reminded me of the days when I was buying this stock at about £26 a share, and I thought to myself, you know what, maybe it's taken an upturn, maybe if we do go to a recession it's going to be good. You know what, I just need to put this money to better use. I think I can put this money to better use. So again, I'm going to average it down again. I've done it before and it worked. I'm going to do it again, and when I do average it down, if I don't sell, someone needs to just find a way to slap me through the screen or something, because I don't know why that once I get it into profit I start not wanting to sell it, which is obviously a very bad thing. Excuse me. So yeah, Imperial Brands for me is a sell, but obviously not straight away. I will be averaging it down, and then obviously taking it from there. The next one to talk about is pineapple. Where's pineapple? Pineapple for me is definitely a strong buy. I'm in a loss, 8.32%, £163 down. I'm just seeing this as an opportunity. We know that they've got a superb business. It's a 1 trillion valuation company. It will continue to grow. I think there was announcements of Apple cars potentially coming soon. You've got the whole services business, which is doing really well. Obviously they've just got a loyal following, and the amount of money they make from App Store and just all of their other businesses. I don't need to go into Apple into too much detail. I think you guys know about it. We talked about it in great lengths. And so for me, it's a strong buy. I'm just going to hope that it continues to fall so I can get a lot more shares at a sort of lower valuation and just sit in them and then hold them once I actually do that. So for me, Apple is a strong buy. The next stock is always making dough, AMD, which at the moment isn't always making dough, but you know what, it's still in profit for me. In the last 7 days it's gone down 7.41%. I'm sitting at a 13% profit at the moment from a capital gain standpoint, and yeah, I'm going to continue investing into AMD. It's a buy for me. It's not a strong buy. I still think it can go down a bit more for it to go into strong buy territory, and obviously I am still in profit for it, so I'm not going to start deploying a ridiculous amount of capital. You can see when you look at the 1 year graph, it's still 93% up. So some people that invested exactly a year ago and just held, they're in a ridiculous amount of green at the moment. So I still think there's a lot of falling to come. I think AMD is probably going to be quite severely affected by this whole coronavirus situation, and I think it might continuously fall for a while, and so then it might go into strong buy territory. But at the moment it is a buy. I did do a recent purchase of about £151, as you can basically see. I bought 4 shares on the 25th of February, and yeah, I will continue to buy AMD, but at the moment it's not going to be a strong buy. It's just going to be a normal buy for me, and then I'll basically play it by ear from that standpoint. The next stock is PayPal. PayPal went down 7.26% for me. PayPal for me is a fantastic business. They've got an impeccable balance sheet, probably the best balance sheet of any stock that I currently hold. They've been doing some decent acquisitions, and I think PayPal will continuously grow. This is going to be a staple of the tech sector, a staple of the payment sector, and a staple of the US economy, for many years to come. So yeah, PayPal for me is a strong buy. It will always be a strong buy for me. At the moment it's down 2.34%, 23 quid. I probably would like to see it go down a little bit more, but obviously its balance sheet is quite good, so maybe that won't happen as much. It won't be as volatile as some other stocks, but I'll continue to be buying shares in PayPal at the moment. It's obviously down, so yeah, obviously I bought it at prices higher than this for it to be minus 2.34%. I'm definitely happy to buy it at this current price, and I'll continue to do so. The next stock is Shopify. So right now we're in the 5 stocks that have performed, I could say the best of a bad bunch. Yeah, the 5 stocks that have performed the best out of the bad bunch. So number 5 is Shopify. Shopify is 5.63% down this week, but if you look at it over the year, still 144% up. If you look at the max graph, 1,704% up. So listen, Shopify is not really hurting considering what's been going on. For me personally, I'm still 39% up. I only ever did 1 investment into Shopify. Hindsight is a wonderful thing, but I'm there thinking, you know what, Curtis, you should have bought more Shopify shares, but que sera, is what it is. At the moment, Shopify for me is a hold. at these valuations, I still don't think I can buy a lot more into Shopify. If Shopify was to go down to about the 400 share like mark, $400 share price around this peak here, if it was to basically hit, I can't really do support and resistance lines, but if it was to hit this support, shall we say, then you know what, I will definitely buy another round of Shopify at $400. That would still probably be profitable for me, because I can't remember what price I bought, and I'm not going to click into that. But yeah, I think Shopify for me is a hold at the moment, but I will wait to see if it continues to fall, and if it does continue to fall at around the $400 mark, then I probably would definitely put a few more shares into Shopify as well. Number 4 is Lloyds. Lloyds has gone down 5.48% this week, and as you can see, it's 12.19% down, £181. They're moving towards a quarterly dividend, and for me, Lloyds is just a keep buying stock. It's a stock that I'm going to keep on holding, and it's something that I'm going to continuously buy. Obviously, I think the share price is pretty cheap, and I do think that Lloyds potentially can get to an 80p share price. I did a video on that a while back where I talked about I think Lloyds can get to an 85p share price if things are going well, and at that stage, then I might reconsider what I do with Lloyds. But at 50p a share, I'm going to continuously put more money into Lloyds. So Lloyds for me is a strong buy, and yeah, I'm going to continue to do that. Number 3 is Micro Hard. Micro Hard has only gone down 5.2% this week. At the moment, I'm 5.45% down, £57 down. Again, I only done one purchase into Micro Hard, but that was recently. That was on the 31st of January, so less than a month ago, all things considered. And for me, Micro Hard is a buy. Listen, I need it to go down a little bit more for me to consider it a strong buy. At the moment, it's at $151. When I'm looking at the year graph, I'm thinking to myself, you know what? If it can get to about $139, maybe this place was about 136, I will then buy a lot more aggressively and heavily around this period here. So at the moment, it is a buy. I will definitely buy at these prices, because obviously I'm in a loss at the moment, so I was happy with the prices I bought at recently. But if it can get to about the $136, $137 mark, then I will continue to buy at more aggressively, and that'll be a strong buy. So yeah, it's a buy for me because it is in the loss. It's not a hold at the moment. I would buy it now just because it might continue to rise from this point onwards. But if it does continue to fall, then it might go into strong buy territory for me at the moment. The next stock, number 2, is JP Morgan Emerging Market Bond. Basically, this pays for my free trade ISA effectively. It's down 1.79%, and for me, it's just a buy. I'll continue to put at least a share every month into this, and continue to build that monthly dividend that I basically receive from this, which I like to receive. So yeah, that's always going to be a strong buy. There's not much to say on that front, and I'll continue to basically buy. Plus, obviously, government bonds are a sort of safer bet, a safer hedge during sort of negative times, so I should probably be putting more money into this anyway, just to keep my portfolio diversified and to not, to restrict the amount of losses that my overall portfolio is taking. And the last stock is Okta. We're gonna have to find a name for Okta, because Okta is the only stock to have gone up this week, and that's gone up 0.99%. So yeah, in position number 1 is Okta. It's done the best for me this week by going up 0.99%, which is just funny because that's never ever been a sentence I thought I would say, but hey ho, this is the market. You never know what's going to happen. At the moment, Okta is 10% up, 98 quid. Again, I've only ever done one purchase into Okta. Okta for me is a buy. It's not strong buy territory for me at the moment because I'm still in profit, and when I look at the year graph, you can see it's gone up 50% over the course of the year. For me, I'm probably looking at trying to turn Okta into a strong buy if I can get into territories of about 110. If I can get to the 110 mark, in terms of if it goes down to about that mark, that then becomes strong buy territory for me with regards to Okta. It probably won't get to that far, but at the moment it's still a buy, so I will definitely want to add a bit more money into Okta. And that's basically all of my 21 stocks. Now overall, as you guys know, I've got £1,000 remaining of my ISA allowance that I can invest basically up until the 5th of April. I'll be doing that at some stage next week, and then not only that, after I invest the 1,000, we're going to be in a new tax year, so all of those strong buys that I mentioned will be the stocks that I'm going to prioritize in terms of my investments. I'm not probably going to just average everything. I might actually just go, pick 2 or 3 and put my money into those, and the next month do the same thing. But we'll see. When we don't know what the market's going to look like in a month's time, so obviously what I do at that stage might differ. But if everything stays as what's happening right now, or if it continues downwards in the trend that's happening at this current moment, then that's basically my plan for those stocks. So yeah, hopefully you found this video interesting. I had to do something different just because the last portfolio update and today's one would have been pretty much identical if I did the same thing. So if you want to know, typically what's going on in the news, what's going on with coronavirus, what's going on with the markets as a whole, then go check out my last portfolio update, which I did only like 2 or 3 days ago. But if you want to know in more detail about whether you should buy, whether you should sell, whether you should hold, what people have done during a recession, and how they've basically taken advantage of that and seen that as a potential opportunity, what's been going on with the global markets over the course of the week, then check out my video yesterday, which is how to invest during a time of a recession and a crash, and that's going to have a lot more detail for you. So yeah, hope you found this video useful. If you did, like, comment, subscribe if you're new. Hopefully have a good weekend, and I'll catch you next week, where we're probably going to see a lot more downturn, and obviously I'll be with you every step of the way. Take care, peace, have a good weekend, catch you later.